Amazon and Apple both have earnings coming out this Thursday after market close, but personally, I am more bullish on Amazon over Apple. Let me tell you why. Amazon is in a excellent position to benefit from robotics and AI through their fulfillment centers and AWS cloud platforms. Automating tasks in their warehouses would benefit bottom lines by removing costs. One day we will be living in a world where Amazon delivery trucks will be delivering autonomously and warehouses will be packaging goods with and by robots, removing the hourly wage costs, medical leave, benefits costs, and etc. Amazon AWS benefits from the AI economy, being a leading cloud provider in the space. We received a bullish signal from the market after Google's earnings. Google is slowly being removed from the penalty box. Google experienced a double digit growth in revenue, a positive sign for tech earnings. Google Cloud revenue grew 31% last quarter, a positive sign for Amazon's AWS. AWS customer base is larger compared to Google, so imagine what the growth story could be with Amazon. So, I am bullish on Amazon because of AWS and automation being a new source of revenue and cost eliminator. But Amazon is also a growth story with new segments like Zoox, their self driving taxis, and Project Kuiper, satellites directly competing with Elon's Starlink. Now, let's look at Apple. I don't see Apple as much of an AI leader compared to Amazon and Google. Google has Gemini, Amazon has Alexa Plus. Both Amazon and Google have autonomous vehicles, but Apple does not. Remember when the Apple car was like the gossip around investors, but Apple never delivered the Apple car? Google and Amazon are able to produce autonomous vehicles. Why not Apple? Apple also has to rely on ChatGPT to improve Siri. Google and Amazon are able to create their own interactive voice assistants, especially Google with their Gemini large language model. Revenue has been rather flat for the past couple years. Apple's revenue used to be high growth from 2005 to 2020, but this phase of acceleration growth has slowed since 2021. So, what does this mean for Apple? Apple is no longer just a hardware company. They have matured as a company and are now becoming a software company. After all, most people already have iPhones and only upgrade every so often. Unlike hardware being a one time purchase, software provides a steady, recurring revenue stream. Services now account for 27% of Apple's revenue. Services are growing faster compared to products as well at 12% versus 3%, respectively. Apple's move into software can help with customer retention. Users enjoy a seamless ecosystem. Think of how convenient AirDrop is. Think of how people joke about green text bubbles and how blue is supposedly superior. Apple is making their headway into entertainment like Apple TV. And there's also the fitness apps through their fitness app on the phone and on Apple Watch. So, when it comes to a growth story versus a maturing company story, I find the growth story more appealing. There's more reward at the end of a growth story, and I think Amazon is a good pick for my personal investment journey. I have more conviction in Amazon than I do in Apple. I own shares in Amazon and I intend to carry these shares going into earnings. I am bullish on Amazon for the long term. My AI model last week predicted the 47.5 strikes and above would be out of the money for Celsius. This came true as Celsius ended the week at 46.64. Unfortunately, I sold the $46 strikes, so I did get assigned on my shares on Celsius, but I am satisfied with my Celsius gains. I may jump back into this one if the price goes lower. This is a data science machine learning model that attempts to predict which strike prices would be in or out of the money by the end of the week for popular indexes and stocks. Let's get into this week's predictions.